Video we're covering external commercial borrowings under FEMA, what Indian companies need to know before raising foreign debt. This is based on the RBI FEM Borrowing and Lending First Amendment Regulations 2026. Let's break it down. What is an ECB and who can raise one? ECB, external commercial borrowing, is any borrowing by a person resident in India other than an individual from a recognized non-resident lender in foreign currency or in Indian rupees, updated under the 2026 regulations. There are three types: foreign currency ECB, loans in USD, Euro, GBP, JPY, CHF, SGD, AUD or CAD from any person resident outside India, IFSC branches or offshore branches of Indian banks. INR ECB, loans in Indian rupees from non-resident lenders including foreign branches and subsidiaries of Indian banks, now permitted under the 2026 framework. The exchange risk stays with the lender. And trade credit, buyer's credit and supplier's credit for import of goods and services, governed under the same regulations. ECB framework 2026 key changes. The 2026 framework has made significant changes on both the borrower and lender side. On eligible borrowers, any person resident in India other than individual can now borrow. LLPs and partnership firms are now eligible under 2026 rules. The old requirement of being eligible to receive FDI has been removed. If you're registered under Central or State Act, you're eligible. Entities under restructuring of CIRP can raise ECB, but only if specifically or specially permitted under the resolution plan. Permitted end users have been expanded. Capital expenditure, acquisition financing for control of a target entity and land for real estate construction are now added. And the cost of borrowing is now linked to prevailing market conditions, no longer tied to predefined benchmarks, a significant liberalization. On eligible lenders, any person resident outside India, including individuals, can now lend under ECB. Foreign equity holders and group companies with a common overseas parent are also eligible. Offshore and IFSC branches of Indian banks can now extend INR ECBs, a major change. GIFT City is currently the only notified IFSC in India, and importantly, there is no longer a FATF or IOSCO country requirement for lenders. Any foreign resident can lend. Key ECB parameters 2026 framework. Let's go through the key parameter. All-in cost now market-based, no fixed benchmark ceiling under 2026 rules, more flexibility for borrowers. Parking of proceeds, ECB funds can be parked in liquid assets until actual utilization begins. The negative list has been updated. Capital markets, chit funds, real estate, agriculture are still prohibited, but real estate or infrastructure or development projects is permitted, and acquisition financing for control is now permitted. Hedging is optional, but if you hedge, it must cover principal and interest, must commence when the liability is created, and must have a minimum 1-year tenor of rollovers. Form ECB must be filed with your AD bank before the first drawdown to obtain the loan registration number, the LRN. Any changes to ECB parameters must also be reported through a revised Form ECB, and Form ECB2 must be filed every month through the AD bank until the ECB is fully repaid. If part of the ECB is converted to equity, report it in Form FCGPR alongside the ECB2. 4 ECB violations still critical in 2026. Even with the liberalized framework, 4 violations remain critical. Violation 1, using ECB proceeds for prohibited end users, using proceeds for an on-lending for prohibited purposes, or to repay a domestic INR loan that was used for restricted purposes or that is classified as an NPA. These are straight violations. Violation 2, breaching the all-in cost ceiling. Cost is now market-based, but all costs must be transparent and arm's length. Artificially suppressed costs to route profits offshore remain a red flag. Violation 3, not filing Form ECB before drawdown. This is the most commonly missed deadline. Filing Form ECB before the first drawdown to get the LRN is mandatory, no exception. Violation 4, missing monthly Form ECB2 violations every month until full repayment. If the ECB is converted to equity, file FCGPR for the converted portion and continue ECB2, noting partial conversion until it's fully converted. Late filings require compounding. Repeated delays trigger scrutiny. The ECB process step by step 2026. Here's the complete ECB process under the 2026 framework. Step 1, identify your eligible lender and check the negative list. Under 2026 rules, any person resident outside India qualifies. FATF compliance is no longer required. Verify your end use against the updated negative list. Step 2, get your AD bank's in principle confirmation. The bank must confirm the ECB structure is permissible. Under the 2026 rules, the borrowing cap is USD 1 billion or 300% of net worth, whichever is higher, unless you're regulated by a financial sector regulator. Step 3, sign the loan agreement. Include all ECB parameters. Cost terms are market-based. Currency can be changed from one foreign currency to another or to INR freely. Step 4, file Form ECB through your AD bank before the first drawdown to get the LRN. Any changes to ECB parameters must be reported through a revised Form ECB. Step 5, file Form ECB2 every month until full repayment. If you're converting to equity, file FCGPR CR for the converted portion alongside ECB2, noting the conversion. Stop filing ECB2 only after full conversion or full repayment. Raising foreign debt. The 2026 ECB framework is more flexible, but compliance obligations are just as strict. Get the structure right before the agreement is signed. At FEMABIDE Advisorz, we advise Indian companies on end-to-end ECB compliance under the 2026 framework, eligible borrower and lender verification, end-to-end end-use structuring, form ECB filing, monthly ECB2 reporting, hedging compliance, and compounding of past violations. DM ECB on Instagram at FEMA_consultant, visit FEMABIDE.com or WhatsApp us at 9933385556. Don't guess with FEMA, call FEMABIDE Advisorz.